Welcome back, everyone, to the Logistics Leadership Podcast. Once again, your host, Karl Siebrecht, here with another great guest. Today, we are going to focus on M&A, mergers and acquisitions, and the state of play of M&A in the logistics industry. There is no better person to help shed light on that than my guest, Ben Gordon. So, Ben is managing partner of Cambridge Capital, an investor in niche supply chain leaders, and he is also the managing partner of BGSA Holdings, a leading mergers and acquisitions advisory firm focused on transportation, logistics, and the supply chain technology sector. So, with that, welcome, Ben. It's great to have you on the podcast.
Carl, thanks. Great to see you again. It's been all of 3 weeks since the last time I saw you.
It has. It has. So, again, thank you for being here. I thought just for the listeners, if you could just start by giving us a sense of yourself, your background, and what you do.
Sure. So I'm a supply chain guy. I've really spent my life, career, and beyond in the supply chain world. I say beyond because I grew up in a supply chain family. My grandfather started a truck leasing company. His grandfather started a horse and buggy business called Morgenstern Express. So I've been a supply chain guy all my life. And so where I started was in '99. I started one of the first e-commerce logistics companies. It was a SaaS TMS called Threeplex, and so we were. But nobody used those words or acronyms back then, by the way. But we were pioneers in using the internet to help logistics companies automate their business. TMS, of course, as your listeners probably know, is really like an operating system for logistics companies. And so we were helping mid-sized 3PLs compete against the giants by democratizing access to great technology. And did that, raised 28 million, ultimately sold the business to Maersk in '02. Maersk then sold it to IBM. And then that really set me on my journey of building a string of companies in the supply chain world, and then an investment bank, BG Strategic Advisors, doing M&A for great companies in the supply chain world like UPS, FedEx, DHL, Genco, NFI, New Breed, a variety of others. And then started investing my own money and that of partners with Cambridge Capital into terrific platforms. We were an original investor in XPO and a host of others since then. And so today, still own BGSA, still provide M&A advisory work for companies, spend the majority of my time at Cambridge Capital focused on investing in terrific companies and then helping give them the resources to accelerate their growth.
Fantastic. Sounds like quite a journey. And you and I have known each other for quite a while, but I hadn't yet heard the part of your background of your, what would it be, your great grandfather with a horse and buggy transportation company. That's fantastic. Definitely in the blood.
I've always got to save something new for you for next time.
Yeah. Now I can't wait till the next time for us. Okay, so if I do the math roughly right, you started BG Strategic Advisors roughly 22, 23 years ago. And over that time period, both on the advisory side and the investing side, you've seen a handful of business cycles in the broader economy and, of course, in the supply chain logistics sector. So, with that rich perspective, give us a sense of where we are right now in the business cycle in logistics and supply chain.
So we are in what I would call the rebound phase. And if you think about it, the last 3 years were the worst, deepest, and longest domestic freight recession we've ever seen. And it didn't just hit freight, it hit everything, but it hit freight the hardest. And you see that in the 50% plunge in truckload rates. You see that in the spike in bankruptcies, trucking companies, of course, like Yellow, among many others, and brokerage companies like Convoy. So it's been a rough 3 years for the industry. Things are starting to come back. We believe freight rates will come up close to 50% this year. And we see M&A activity that reflects that surge in enthusiasm. So I think number one factor is the rebound from the deep freight recession. But there are other factors too. A second factor is the surge in optimism. You saw at our conference, the BGSA Supply Chain Conference that we hosted in January, one of the things that we get to do is learn from all the other great CEOs and leaders like you who are there. And of course, the survey data, which is for me the one of the most interesting things, shows that more than 70% of attendees are expecting double-digit growth for their companies this year,
Right.
and more than 70% of them are expecting to participate in some sort of M&A or other transaction this year. So it just tells you from the bottom up, as opposed to just top down prognostication, the enthusiasm for 2025 is very high. And the last thing that I'll add is we already start to see that in the data based on some of the deal activity that we're seeing now.
That's fantastic. I know we had originally hoped to record this session a month or so ago. I think it's actually better that we're doing it now, just on the heels of your conference. I was going to reference that same data and just the perspective. And for those of listeners who don't know, Ben has run this conference for over 20 years, I believe, and really attracts almost all of the top leaders from the largest logistics and supply chain companies out there. And so when you get these folks in a room and you ask them their opinions on the outlook of the industry, sort of it's a crowdsourcing exercise, but the crowd is particularly relevant because the perspective and of the scope of perspective across the combined companies is really, really impressive. So thanks for referring to that. And that survey data, real time in the room really reflected that. You also called out specifically the sort of appetite for M&A. Can you give a sense about like what is driving that? Again, you mentioned in general already, hey, the freight recession is largely over, and there's sort of more optimism, sort of general business optimism. There are also kind of macro, almost capital markets factors as well. The interest rates and the state of venture capital availability and what the LPs of VCs are thinking right now. Could you get into the capital markets side of this a little bit more?
Sure. So if you think about what happened over the last decade, or actually even go back further, one of the reasons why I started our businesses, first BGSA and then Cambridge Capital, was because I didn't perceive there were many people in the capital markets that really understood supply chain. There were people that understood parts of it. I mean, I remember when we were building Threeplex, my SaaS TMS company, and Morgan Stanley pitched us and said, you should take us as an investor because we know this space well, because we took UPS public. And I was like, hey, that's great, but we're not UPS. It's very different, between what they do and what we do. And so, and then similarly, there were plenty of other smart people, but the actual knowledge of supply chain and technology and innovation um, was a gap. Okay, and so my view was that there was an opportunity to build first an advisory firm and then an investment firm that had that expertise. Okay, fast forward 25 years later to today. I mean, look, the level of interest in supply chain and knowledge about supply chain is higher than it's ever been. We differentiate, I believe, by knowing more, having more access, more CEO relationships, and more insight about what they care about, and being able to translate that into results. But listen, I think it's a good thing that there are more people in capital markets that know and care. And that's part of why there was such a run up in interest, investment, and valuation over the last several years. So I'll give you a data point. On the M&A side for supply chain services, if you took a $10 million EBITDA supply chain services company, just as an illustrative data point, the baseline company in truck brokerage, warehousing, freight forwarding, 15 years ago, that company might have been worth 6 times EBITDA. Okay, 2015 might have been 7. Might have inched up, a little bit more, 8. Okay, during the freight recession, well, actually prior to the freight recession, during COVID in 21, everything shot up, and it shot up because there was scarcity. It shot up because people recognized that they needed expertise and access to capacity that they couldn't have. I mean, remember the world ran out of everything from semiconductors to chicken to toilet paper to numerous other things, and so guess what? The multiples went up and the EBITDA went up too. So that $10 million EBITDA company might have actually been a $20 million EBITDA company in 21. And instead of getting 7 times, might have got 14 times. Okay. So now, but you do the math on that. 10 times 7 is 70 million of baseline value. Okay. 20 times 14. Okay. I'm trying to do that quickly. That's like 300, what is it, 80 million or so? I mean, it's a massive spike in value. And it wasn't right and it wasn't sustainable, but there was this moment in time where there was this huge surge in demand. Meanwhile, on the software side, as in your leadership of Flex, the same things happen in the capital markets for software. So if you look at, and actually the public data on this is the easiest way to do it. If you look at public comps for SaaS companies, 2010, well, first of all, there were hardly any that existed back then. There were in the public markets, but there were a few. But by and large, that category traded at, 2, 3, 4 times revenue, grew to around 5 times ish. Again, on average for the public companies, around 5 times by, 2019. Shot up again, 2021, that was over 20 times. So again, a 4x increase in valuation. Now, look, there was regression to the mean after that. So the services multiples and the software multiples all kind of came back down to the way they were in 2017, 18, 19. And so you could argue that it's not that they're undervalued now, it's that they just regressed to the way they used to be. But value is beauty is in the eye of the beholder. If you're a buyer or seller, you might have a different point of view on that. So look, I think broad brushstrokes, Carl, I would say number one, surge in knowledge, interest, awareness, and willingness to invest in supply chain over the last 15 years. Massive spike during COVID, regression to the mean since then, and I think now we're about to move into the next chapter.
Really, really helpful, that perspective. Um, Another question for you in the broader sort of supply chain and logistics category, are you seeing any particular subsegments that you think are more ripe for activity? I'll sort of I'll highlight a couple of the publicly announced activities that are out there. DSV has been looking to buy Schneider. GXO has announced that they are exploring a potential sale. RXO and Coyote Logistics. So you've got some in contract logistics here, a lot in transportation, freight forwarding. Are there any subsectors, like particular elements of the tech stack or particular service businesses that you're seeing more activity around, or that you think could have more activity because of some sort of underlying dynamics?
Yes. So the couple of the examples that you mentioned were, big deals with big companies covering a lot of territory. I mean, for example, the, DB Schenker sale, for instance, to DSV. I mean, $15 billion deal. That's a bellwether deal, biggest, in the sector in recent history, and certainly illustrates the activity of DSV, which is really a consolidator that's moved from number 3 to number 2 in global freight forwarding and global logistics. So wouldn't call that a niche. Would call that a broad broad range of solutions. On the other side, where are there more niche M&A activities and opportunities? And I think they fall into a few areas. One, global trade management software. One of the things that we talked about at the BGSA conference was if you had invested in a basket of publicly traded stocks like the S&P 500 9 years ago, okay, you would have made a little over 250% on your money, which is great. I'd rather have 250% than no growth. But if you had invested in WiseTech Global, you would have made 3,100% over that time frame. Okay, staggering, right? And the top performer in all of supply chain. By the way, a company that surprisingly few people in aggregate have heard of. I mean, even at our conference, you were there when I asked how many people here have heard of WiseTech. Not that many hands went up, which was amazing. But guess what? I mean, this company grew from nothing to, approaching a $40 billion value business by virtue of focusing on automating global trade management, the software for customs clearance, cross-border trade, and a host of other global trade elements. Okay. Now, they did a lot of that organically, but also a lot of that through acquisitions. I think about 70 acquisitions or so along the way. And so that's a pretty interesting niche area. It's an area that we like, an area that we're involved with, and certainly, uh, you know, find that to be an area where I think there's more. So I think global trade management is one. I think a second one is, look, it's the use of AI, data, and analytics in order to generate more insight. I mean, AI is one of those things that everybody talks about. Of course, the level of hype is very high, but there is some reality behind it. And you saw at our conference, the winner of the BJSA Supply Chain Shark Tank was an AI company. It was Happy Robot, and they were using chatbots to be able to automate the process of communicating with a carrier, or you think you're talking to a carrier, for dispatch or tracking or check calls or otherwise, but it's not really a person. It's an AI powered agent. And the demo that I think wowed a lot of people was when Pablo held up his phone and did a demo and talked to the chatbot and said, my name is Pablo. This is what I want to do. By the way, what's your name? And the chatbot said, oh, my name is Pablo too. And I mean, it was funny. I know we all like to hear people say our names, and so I think there's a little bit of psychology in that. But the reality is, using AI to automate things that are mundane, labor intensive, transaction intensive tasks makes a hell of a lot of sense. And so, look, I think there's a lot of interest in that arena, and that certainly is illustrated by the fact that Happy Robot won the BJSA Shark Tank, but also recently attracted a lot of capital from Andreessen Horowitz and others. Fine. On the M&A side, we see and are involved in a lot of M&A with companies that have analytics, intelligence, and other AI-powered capabilities, which makes them a very attractive target for other buyers. And I think you will see multiple interesting acquisitions in that arena in the coming year that reflect that. So I think that's a second niche. And then, look, lastly, interestingly, um, there are a lot of outstanding supply chain software companies that have been built over the last decade, and I think you're going to start to see some exits from companies in that realm. I mean, there were a handful that sold, but frankly, very few. I mean, Deliver sold at the top, and good for them. But most companies in this arena, most companies that were funded over the last decade and ramped up, by and large, have been focused on heads down growth. And I think this will be a year when you start to see some of the more mature. You can't really call them a startup anymore if they've been around for 8 to 10 years. But I think you'll see some of those as well. So to me, those are three themes for niches.
Very helpful. Very helpful. Um, let's turn now to another characteristic of M&A, which is what happens after the deal closes. So there's tons of literature and studies out there that basically sort of land in a similar place, which says that there's a failure rate of between, there was an article in HBR as an example, between 70 and 90% of acquisitions fail um, due to challenges with integration, challenges with culture, what have you. Um, Having been in this space and you've participated as an investor in some of these exits and as a buyer as well, what have you seen in the industry that are critical kind of drivers of success in the post deal phase of M&A?
Well, I think the number one factor is just being intentional about it and deliberate about it. And as a student and practitioner of M&A, one of the things that I've tried to do is focus on the question of who's done it really well and what do they do right. And I was an original investor with Brad Jacobs in XPO, which grew from nothing to become a $20 billion company over 10 years. And Brad has bought over 160 companies in his career. And so I think Brad probably is the best there is when it comes to this topic. And so I'll tell you what I have observed from watching Brad closely, among others, but Brad in particular. Okay, I think number one, well, number one, prior to the post-merger part, is be deliberate about what you want to buy. In Brad's case, he very much wanted to focus on companies that were the best in different areas. So you could be a buyer that says, okay, I want to buy something in logistics, and maybe the company has some truck brokerage, some warehousing, some freight forwarding, a little bit of everything. Not a deal Brad would do. Brad's view was pick a category you care about and find the guy that's number one or number two, and then figure out a way to make it happen. So, for example, in contract logistics, arguably the top two pure plays were New Breed, which is really contract logistics for tech, telecom, and medical, and Menlo. And so he bought them both. And, he paid what it took to buy the business. I wouldn't say that he neither cheap nor crazy high prices. But his view was, look, pay the right price to own the best business, as opposed to a great price for mediocre business. And so I think being deliberate about what you want to buy, number one. Then number two is make sure that the key people are aligned. Brad would spend a lot of time with the people, going so far as to do psychographic testing. Brad had for example, like a senior former FBI agent on staff, and would do all kinds of psychometrics, and most companies, most people wouldn't do that. But guess what? Uh, Making informed decisions about the people, however you get there, that's pretty important. So I think that's critical. I think third, make sure that the winners in an organization get an opportunity to step up as a part of the deal. So, you're buying a company, and let's say that there are, three or four great rising stars, and they're not CEO and they might not even be C-level, but wherever they are in the organization, make sure those people get opportunities to step up. Maybe it means that they get a promotion. Maybe it means that they get, salary increase. Maybe it means they get more public recognition. Whatever it is, what that does is it sends a message, first of all, to the company you're buying that this isn't like Big Brother, squashing the entrepreneurial spirit of the smaller company, but rather it's about creating something better, where everybody has an opportunity to succeed. Secondly, it also sends a message to your own employees if you're the buyer, which is to say, look, we're going to go for the best wherever that is, because, as they say, talent is evenly distributed, but opportunity isn't. And so if there's somebody who's better that happens to be in the other company, great. That's a great message of meritocracy, and I think it is motivating when done properly. So I think those are some of the lessons learned in terms of acquisition success that I've seen.
Really compelling, and particularly given one of the primary sources and how much experience he has. That's great. So uh, let's take this topic from the customer's point of view. So the shippers. We think that it's likely going to be the case that M&A will start to rebound here in the coming years. We know that there are some challenges in integrations and the success rate broadly of M&A, again, in general. Um, what's your view? Do you think that M&A is on net a positive thing for shippers, whether that's due to the logistics company getting more scale and being able to serve customers better, or the buying company getting more or better technology infused into their platforms maybe earlier than they could, and that creates benefit for shippers? Not to lead the witness, but what's your take? Is M&A on net a positive thing for the end customer, the shipper?
I think done properly, absolutely it is. And I think the sources of benefit for the customer, for the shipper, are as follows. I think number one is um, you get a more comprehensive solution if it's done properly. This is a fragmented industry, as you know. Top 50 companies in logistics, for example, control only like 50% market share. And so what that means is you have lots of companies who are providing point solutions. And if a customer can benefit from a partner that's providing him or her with more in an integrated way, that's terrific. A classic example of that would be, um, well, actually, we were talking about XPO earlier. So, customer of XPO in 2011 was really using the Express One expedited service. 2 years later, they might also be using intermodal, which the Pacer acquisition gave them, contract logistics, which New Breed gave them. A couple of years after that could include the Menlo contract capability, the Conway LTL capability, and a whole host of others. Now, has to be done right. I mean, there's a right and wrong way to do it, but done properly, customers benefit from more scope. A second source of value for customers is um, better pricing. I mean, let's face it. If you look at the pricing, for example, of RXO, which is spun out of XPO about 3 years ago, versus where say the Express One business was, in the beginning, pricing has gotten better. It's gotten more competitive because XPO and then RXO was able to take cost out thanks to the synergies. And so, if you take cost out and you keep some for yourself in the form of a higher margin, and you share some with the customer in the form of a lower price, great. That's a win as well. And then the third is, frankly, better people, better talent. Just to come back to the prior part of the conversation, Brad was very deliberate about recruiting outstanding people from wherever they were, including outside the industry. Guess what? It's a lot easier to hire those outstanding people if you can pay them more. It's a lot easier to pay them more if your business is bigger and if it's public and you've got availability of stock and other tools at your disposal. And so I'm not saying that employees at big companies are automatically better than at small companies. Often it's the opposite. Often it's the people that are working for great, high growth, motivated, scrappy entrepreneurial companies that care more and work harder and do better. But done properly, an acquirer that is very deliberate about continuing to upgrade talent, is going to be able to give customers a better experience. So I think those are three critical ways: broader solutions, better price, better people, that good acquisitions can benefit customers.
Super. Okay. Now I got a couple of kind of forward-looking questions for you, Ben. So one is, if you could pull out your crystal ball, give us a sense for a prediction or two for what you think supply chains and logistics will look like 3 years from now. What will be the big changes?
Well, a couple things. One, I think people are looking for bigger bundles, and so that consolidation that we talked about, that's going to continue. And so, the expression that people use, with their suppliers when they say one throat to choke, which I always thought was a terrible expression. Like, you shouldn't be choking your suppliers anyhow. But but in any event, you will see more consolidation and bigger bundles of capabilities, and M&A will be a protagonist in that. And I think that's true on the services side. I also think it's true on the software side, and that brings me to a second point, which is, we have yet to really see an XPO of supply chain software. We've seen people like WiseTech focusing on one thing and doing a great job of it. People like Infor that put bundles together, but you haven't seen somebody that's tried to roll up an entire industry the way XPO did. I think you're going to see some major supply chain software companies pursue that in their own different ways. So I think that's a second theme and a second area to look for. And then third, look, the big wild card, and the thing that everybody loves to talk about is the political side and the Trump factor. And does it mean that we're going to have tariffs that go up, that reduce global trade, that mean more growth in the domestic supply chain? Or is that more of a negotiating tool so that we as Americans get more of what we want? For example, with Mexico, or the tariff threats being used to control the border, control, reduce illegal crossings, fentanyl, and other issues. And it's more about the negotiation than it is about reshaping, global trade. None of us really knows that, so we'll see. But my hypothesis, and it's borne out by what I think some of the conversations at the BJSA conference reflected, among others, is that we are seeing more domestic supply chain growth. We are seeing companies make more domestic manufacturing investments. We, of course, saw a lot of it in the semiconductor industry. The CHIPS Act had something to do with it, and So, whether it's Intel or a whole host of others, building semiconductor factories, particularly in Arizona and the Southwest. But we're also now seeing more manufacturing investment activity and discussion in the South, particularly given lower labor cost, right to work state, less risk of unionization and other labor challenges that historically caused US and other manufacturers to look abroad. So I think growth in domestic supply chains, starting with manufacturing, but then cascading to warehousing, transportation, and other areas. I know that's certainly relevant for Flex. I'm sure you have a point of view on that too.
We do. We do. Okay, super helpful. And then one other forward-looking thing. So you touched on AI earlier. Clearly, it's an important thing in our world here in logistics and supply chain, as it is elsewhere. You mentioned the Shark Tank winner as well. I know you've got some specific experience in this. I was looking at my notes. You've invested in green screens, which is I think a leader for predictive pricing and truck brokerage. So you're in it. Where do you see the most impact of AI in supply chains, kind of in the near term? And then if you were to sort of again crystal ball this thing out, maybe 3 years, where do you see AI having the most impact?
So AI is a fantastic tool for industries that are data intensive, transaction intensive, and labor intensive. And naturally, sounds like we're describing logistics. So it's no surprise. There's a lot of AI opportunity in this arena. Green screens was a great place to start, both from my standpoint as an investor at Cambridge Capital and from the industry standpoint, because they were laser focused on doing one thing really well, which was predictive pricing. The problem that they were solving was, let's say that you're a truck broker, it could be a shipper, a carrier, or anybody, but if you're a truck broker and your job is to match freight with capacity, you need to be able to, on a real time basis, know what should it cost? What's a truckload of freight from Seattle to West Palm Beach supposed to cost? Green Screens came up with the following idea, which was what if we could aggregate massive amounts of data and then hire brilliant AI and ML engineers and then be able to figure out on a predictive basis, just looking at all the different data patterns, what it should be, right now, right this very second. Listen, I mean, hedge funds, Jim Simons and Renaissance, like lots of people have been taking the concept of sifting through lots of data to make predictive decisions, but nobody had done it in quite that way in truck pricing, truckload pricing. And so Green Screens focused on that and they nailed it, did an amazing job. We're able to win many of the top truck brokerage companies in America, now serve, I think, over 200 of the top 300. Plenty of large ones, most of the mid-sized ones, more than 30 billion of freight volume, approaching 40 billion flowing through the system. And all that data allows green screens to be much more accurate. And I think that's a great illustration of the power of AI. I think there are other opportunities as well. You asked about what else, coming down the pike. Look, I think, agent-based AI, like the BJ's Shark Tank example, where you can automate functions in other areas, whether it's the check calls or discussions with dispatch or other. I think that's a second area. A third, automating inboxes and email responses because there's so much repetition. I mean, there's repetition in everything in your email box probably, but particularly if you are, in a truck brokerage office and you basically have emails coming in, they're asking patterns of similar questions and they want to know what's available in certain lanes or prices or otherwise. And so if you can use
Right.
an email agent to automate that, great, all the better. So like that's the low hanging fruit. We're going to see a lot of that over the next couple of years. The next question is how much more can you do? Can you put together bigger bundles of solutions? I'm not one of those people that believes that technology is going to eliminate the truck broker. There are a lot of people outside the industry that say, oh, we're just going to eliminate the middleman. Well, the middleman is a lot more than just a middleman in this industry, but it will change how truck brokers and logistics companies do their jobs and will automate more. And so I believe, there's the question about it, is it man versus machine? And we believe it's not man versus machine. It's not like the labor-based truck broker versus the pure digital logistics company. It's more the winner is man plus machine. It's tech enabled supply chain companies, and AI will be a great way to help tech enabled supply chain companies succeed.
Yeah. Yeah, that's great. Somebody, I don't know, a week or two ago, I heard a quote that was something like, "Hey, AI is not going to come for your job. Somebody who knows how to use AI is going to come for your job."
That's right.
Well, Ben, this has been fantastic. I want to thank you again for joining us here, bringing your expertise, bringing your very deep and broad perspective, and then also your humor. It's been great. Thank you so much for joining us.
Well, listen, my pleasure. Thank you, and Carl, and always a pleasure to talk with you.